would like, if I may, to take you on a strange journey.
Hello, everyone, and welcome to another edition of Real Estate Realities with The Rebel Broker. My name's Robert Whitelaw, and I am The Rebel Broker. Licensed real estate broker in the state of California. Member of the National Association of Realtors. But please, don't hold that against me. Welcome to it, folks. Today is Wednesday, August 17th, 2016. We're halfway there, folks. I've gotten an interesting mix of emails from listeners over the last week or so. The discussion on derivatives continues in terms of just trying to figure things out. And it gets real tough to suss out details on that. I'm going to throw a few more numbers at you just to try to give you an idea of the scale of the thing, because I think that's probably, it's hard to come to happy conclusions just based on the scale of this stuff. But of course, before we jump into that, head on over to www.therebelbroker.com. I have gotten rid of the old Contact the Rebel Broker thing that used to hover over in the upper right-hand corner. It's still pretty much over in the upper right-hand corner, but now it's part of the menu bar, so just click on that. I had a few of you telling me that it was blocking you for one reason or another, and I wish I said I know exactly why that was doing that, but I don't. So I've created this other page for you to go to contact me. And so please use that. Hopefully that will present you with less problems. I do have a piece of software on there I installed to limit spammers. You'd be stunned if you knew how much spam gets generated by the website in terms of weird people trying to hack it and fake passwords and all kinds of weird stuff. So I implemented that just to cut down on the amount of that. And hopefully it's not catching any of my perfectly normal listeners in that net. But I appreciate those of you who've reached out to me and let me know that that's happening, because I wasn't really aware that it was happening. So thank you for that. And of course, still hoping folks can take a minute out of their day to go fill out the survey. It's 5 to 7 questions just to get an idea of the demographics of the folks in the audience. There's a button leading you to that at the very tippy top of the webpage. I believe it's titled something witty, like support the show, take the survey, or take the survey, support the show. Please take a minute out of your day to do that. You'd be helping the show grow. You'd be helping the show become more independent in terms of being able to spend more time on the show to give you different things. And also, if you are one of the select folks who have signed up for the Rebel Broker, I guess the way it's phrased is the newsletter, but for the contact you via email list that's presented at the website, just to give you a little heads up, something's probably going to be showing up in your inbox here pretty soon. It's all kind of part of my strategy to grow the show, which also is obviously directly involved with getting these demographical bits of information relating to my audience. So just trying to make the show better on every level so everyone can get more out of it. And the reason why we're going to jump into the show and start talking about derivatives a little bit is because I don't feel right just sort of saying, well, good luck, everybody. I'd much rather say, well, what do you do if this stuff starts to happen? And when it comes to preparing for potentially bad things, I'm not someone who jumps right to the build a bomb shelter and know how to handle radiation poisoning solutions. I get that there's a segment of folks who do that, and what's really nuts is when you start doing searches on Google with phrases like how to prepare for a derivatives bubble, derivatives collapse, what are the effects of derivatives, so I can kind of suss out how you might mitigate those things. I get some very interesting suggestions. I thought it might be fun to just sort of run through them. And I think this is probably aimed more at anything, more of the absolute most mild thing all the way up to the worst thing. But I got to tell you, some of these items, you'll read them, and it's like, okay, come on, man, really? Let me see if I can scroll down to the list. The first one was, should I stay or should I go? In other words, should you stay in the United States or should you leave the United States? And I wanted to bring this one up and actually talk about it for a minute. Because while there are an awful lot of people who want to talk about how bad things are in the United States or how horrible things are in the United States, the segment of our population that will not say things like that are people that have traveled to any other country. Let me just say, I have been to more than my share of other countries. I've been to almost every country in Western Europe, one country in Eastern Europe, several countries in North Africa, several countries in South America. I have been to South Korea, and I have been to the Philippines, and I have been to all those wonderful places. And if people are thinking they're going to split the United States because they're going to head to a place that's likely to be more stable in a very bad downturn, just let me suggest that that's probably not a high probability. You're not going to be better off going to South America. You're not going to be better off going to the Caribbean islands. You're not going to be better off in Europe. You're not going to be better off in Asia. At least for my money, that would not be something I would think about. I will also let you guys know that I actually had someone reach out to me who's I guess they must be a listener to the show, or maybe they're just one of those folks that gets an alert whenever anybody posts anything on the internet about derivatives. Man, they wanted me to interview them and talk about their book and all of this stuff. They sent me a copy. I read it, and it's a first class ticket to Crazy Town. So I'm going to pass on that particular offer. But what are the sane reactions? What are the things that do not immediately put you into this thing where your concern over an issue becomes a way of life, right? There are reasonable things that you can do that make you more prepared for potential bad stuff that fits all kinds of different bills, not just derivatives balloon, right? Earthquakes, hurricanes. There's things that you can do that cover an awful lot of bad stuff bases. So I think the safe and sane approach is to concentrate on that instead of stocking up on thousands of rounds of ammunition, buying face paint and camouflage clothes and Geiger counters and all of that stuff. Let's just take a step back a little bit and realize that, is there any statistical probability you're going to need that stuff? Yeah. Maybe so. I consider that to be so statistically insignificant enough that it's not worth me wasting a lot of bandwidth preparing for that kind of extreme thing. Okay? So that's where I'm coming from. And please, for the folks who've listened to this show long enough, I'm perfectly willing to discuss scenarios and try to figure out what the best way to manage them is. But if you're another person who's got that whole, Illuminati / tinfoil hat / I have a bunker thing going on, I'm not your guy, and this isn't your show. So please take that to wherever people talk about that stuff. Anyway, so preparedness, yes, good, fantastic for likely a large spread of things. And one of the things on this list is hope for the best, but prepare for the worst. And for me, preparing for the worst is preparing for something that's got maybe more than a 20 to 30% chance of happening, right? I'm not going to go for the thing that has a 2% chance of happening. But if I'm only preparing for that 20 to 30% of stuff, I'm still a heck of a lot more prepared than the average person, right? The next thing on their list is prepare a 72-hour bug out bag. And this is basically a bag that contains everything that you would need to survive for 3 days. I actually don't think that's a bad idea. And less because I think that zombies are going to start running down the street, but more because if a natural disaster occurs where you're required to evacuate your home, it's good to have something where you can just grab it and go. Do I have one? No. Did I used to have one? Yeah, I used to keep one in my car a long time ago, and as much because just to be ready for any weird thing that might happen. The next thing on their list, understand what just-in-time inventory is and how this can affect you. So this refers basically to how the supply of stuff gets negatively affected. And this is an interesting one to talk about, because if we saw a dramatic hit to the economy that really screwed up our currency, there's a dramatic probability that we would see things either become ridiculously too expensive to purchase, like we did in the Weimar Republic period, right? Where I think I've told this story a couple of times in the past, where their currency was doing such horrible stuff that you had to get paid several times a day, and you'd have to leave work because a loaf of bread would continue to rise in cost during the day. So you'd get wheelbarrows of cash. There's actually pictures of this on the internet of folks with wheelbarrows of cash going to buy bread, because if they didn't go do it now and waited until they got out of work, then the bread would be twice as expensive or 100 times more expensive. That's crazy inflation. Where it's not measured by how much inflation we had over the last month or the last year. It's measured by the hour. Inflation is occurring by the hour. And I get that a lot of people just don't grok that can happen, but it has happened. So that kind of derails this idea that it can't happen. So is it something worth being prepared for? Yeah, I mean, it's a potentially crazy tool. Remember, we've talked about inflation before as the invisible tax. This is the idea that no one actually comes and takes your money, but simply prints more money so that the money in your pocket doesn't buy as much as it did the day before. That's a problem. And that is something that is sadly very likely to happen if we have a crazy derivatives situation occur. At least that's what I'm able to suss out from what I get. When I try to filter the absolute crazy stuff from the stuff that actually makes any sense, there are a few common threads. So we're gonna talk a little bit about those. Before we do, though, let's take a quick break. And right after this, we'll get more into the rational, safe, and sane things that you might want to think about doing to prepare for any bad stuff that might come from derivatives. So stay right there. Are you ready to jump in and start your search for your first investment property? Maybe you've decided that it's time to own your own home, or maybe you're ready to sell your home and move on to something new. No matter what your goal is, the Rebel Broker can help. That's right, aside from hosting this show, I am also the owner, broker of Whitelaw & Sons Real Estate Services right here in Silicon Valley. With over 25 years experience serving Silicon Valley, Morgan Hill, San Martin, and Gilroy, I or one of my great agents can help you achieve your goals in real estate. So if you're ready to look into taking that next step towards achieving your real estate goals, point your browser at www.soldbyrobert.com. That's www.soldbyrobert.com and get in touch. Let me show you how I will earn your business and your respect. Again, that's www.soldbyrobert.com, or you can call me at 408-852-0525. California Bureau of Real Estate ID 00984-909. Welcome back, everyone. We're kind of giving a follow-up to our derivatives discussion from an earlier show, where we sort of left it really literally with me asking you all for any insights you had on the subject. Because I think my first thought was to simply turn on the warning light on that one, just to get people thinking about it. And I didn't really have any realistic suggestions. So I started looking a little bit more into it, tried to separate the kind of crazy stuff from the more practical stuff to come up with things that you might want to consider doing relating to preparing for a possibility of this. And the suggestions I'm going to make are tend to be general, so they'll apply to a lot of different potential bad things happening, whether it's a natural disaster or some sort of a bad economic thing. And it'll apply more generally. Derivatives is, I think, potentially a huge catalyst for really, really bad stuff. And as we were talking about just before the break, one bad thing that would happen most likely is ridiculous inflation, and also an inability to get cash. So these are scenarios that you can potentially prepare for by taking some measures of your own. One thing I would suggest you do, and this applies, have a emergency set of stuff, food and water, an ability to cook without necessarily using the stuff in your kitchen. So I know we camp, so I've got propane, I've got little cookers that I can use, that kind of stuff. And always make sure that you've got some way to get water or have water, and have enough food to feed yourself and your family for whatever period of time you think makes sense. Again, I'm not talking about hunkering down in a bunker for 6 months. I'm talking about being able to weather a time period where you may not have the money to buy food, and potentially a situation where you simply can't afford it, given what's happening with inflation. And I really want to stress, this is not. I mean, I'm saying these things out loud, and it has the edge of a little bit of craziness, and I'm willing to totally embrace that as an accusation and a potential problem. But again, I honestly think that these are great things to have no matter what's going on with you, or what goes on with the economy, or what goes on with natural disasters or anything else. I think being prepared for this kind of stuff is so relatively inexpensive that, given the potential payoff in a really bad scenario, you'll be glad you did it. And if not, great. It was the world's cheapest insurance policy against bad things. Obtain water and figure out a way to purify it. That's one thing that's on this. And this is the crazy list. I'm going down what I consider to kind of be the crazy list. Then we get into some of the more interesting stuff, like know how to protect yourself in terms of knowing how to use a firearm and being ready to use it. Have a way to cook food in case the power goes out. Understand the psychology of desperate people. Maintain proper hygiene. I think that was at the no. How to dispose of waste and proper sanitation. I mean, and it goes on to other stuff here. Understand radiation fallout. How to protect yourself. First aid. So it keeps going here. But another thing in here that without going to the extreme, understanding how people react to stuff, I think is good. Understanding the psychology of people when bad things happen, and you don't have to go into some theoretical area to figure this out. All you need to do is look at recent history, whether we're talking about Greece or whether we're talking about Venezuela with their recent stuff, or whether we're talking about Spain, or we're talking about the U.S. and the Depression. People start to go nuts and start doing stuff. And what happens with the derivatives market? Now, before we get more into this, let me lay out some more interesting stuff relating to derivatives. Now, I was mentioning last time that the derivatives market was about 350 trillion. Well, I was off. The 350 trillion mark is apparently just some segments of the market, or just only the stuff held by some banks. The derivatives market, according to an article from May 27th of 2015, so this is a year ago, right? The derivatives market then was estimated at $1.2 quadrillion. Not trillion, 1.2 quadrillion. And that's crazy stuff. When you think, that's a number that people can't even understand. This article goes on to say some market analysts estimate the derivatives market at more than 10 times the size of the total world gross domestic product. The reason the derivatives market is so large is because there are numerous derivatives available on virtually every possible type of investment asset, including equities, commodities, bonds, and foreign currency exchange. Some analysts challenge estimates of the size of the derivatives market as vastly overstated. So whether it could be anywhere from that $350 to $400 trillion mark, which is still mind blowing, all the way up to 1.2 quadrillion. So that number should scare the hell out of you. And the fact that we've talked about other banks and how much they hold in derivatives. Deutsche Bank, 96% derivatives with only a 3% reserve in cash. That's crazy stuff. Now, if we also then sort of look to American banks, and this is an article that I tried to limit it just to stuff within the last year. So this is from the first half of 2016. I don't see an exact date, but it makes references to things in February of 2016, that type of thing. Let's see. The very same banks that created the last economic crisis have now created a $278 trillion derivatives nuclear time bomb. Since this is from earlier in the year, I'm guessing that this is probably referring just to what's being held by American banks. So it could be that $300 to $350 trillion number. It has now just grown since then. JP Morgan Chase. I wanted to throw some of these out here. JP Morgan Chase alone holds $2.6 trillion in derivatives. Total assets are $2.6 trillion. Total exposure to derivatives, now remember, their total assets are $2.6 trillion. Their total exposure to derivatives, $63 trillion. Do you get how nuts that is? That's like, that's 30 times what their value is. That would be like if you had, it's like being in, it's like having $10,000, but going into debt for $300 or $1 million. I mean, it's the discrepancy between what they're worth and what their exposure is mind-boggling. It's numbers we can't even really grok. Citibank, they are in total assets $1.8 trillion. Total exposure to derivatives $59 trillion. Goldman Sachs, $856 billion, under $1 trillion. Total exposure to derivatives $57 trillion. Bank of America, a little bit more than $2.1 trillion in total assets. Total exposure to derivatives, $54 trillion. Morgan Stanley, another $801 billion company, so less than $1 trillion. Total exposure to derivatives, more than $38 trillion. Wells Fargo, total assets of $1.7 trillion. Total exposure to derivatives, $5 trillion. So they're kind of the best player in this in terms of the level of exposure, but it's absolutely insane. The more numbers I get, the more stuff I'm able to tweeze out just to get solid data, the more concerned I am. So one thing you can do is consult a list. Now I'm going to include a link that will give you sort of a priority or a ordered list here that you can sort by derivatives. And it's just nuts. There are banks that don't have these investments in derivatives. So one suggestion that I heard from someone who was kind enough to respond about the last show was to try to focus keeping your money with banks that are not leveraged so much by these derivatives. So take some time, do some research. The more you research this, the more you're going to see kind of apocalyptic sounding articles. Financial Armageddon approaches. U.S. banks have $247 trillion in derivatives. The coming derivatives panic that will destroy the United States. I mean, it's going to be nuts to see how much pops up on this. But what you want to do, according to some folks, is first try to get yourself invested or holding your money with banks that are less leveraged in the derivatives market. Next, have enough cash on hand to operate and meet your most fundamental needs for some period of time that you're comfortable with. It could be 2 weeks. It could be a month. I personally think the lowest number and this is a policy I've sort of embraced, but I've been doing this for a while, just from the standpoint of more worrying about putting like earthquake kits together and being able to do things if electricity goes down and you can't get to ATMs now anymore because there's no power, that kind of stuff. I mean, living in California, right? We there's a lot of pushes to have go bags relating to just earthquake related stuff. So I've always sort of had a policy of having at least a month's worth of operating capital, and at some point I increased that to 3 months just in case there's huge increases in prices during that period of time. So those are the first precautionary things that seem to be reasonable and seem to fit more of a balanced precautionary thing that doesn't require you to change your lifestyle. So take that for what it's worth. If you come up with some really great information, I'll be honest, I am typically really good at doing research on this stuff. Whenever I try to talk to you about things, I've usually consulted several different sources. And I find it very difficult to get just quality data and information that I can go off and verify independently. There's a lot of folks who want to peddle the fear and make money off of you. You know, one of those deals where listen to this video to figure out exactly how to survive the next derivatives crash or whatever. None of that stuff's going to help you. I mean, anything that's sort of preying on your fear, they're clearly trying to sell you something. So instead of letting that go crazy and making you lose sleep, just think about strategies, reasonable strategies that apply to a lot of potential bad things. Long-term power outages from whatever reason, those types of things. Things that might prevent you from being able to get money, things that might prevent you from being able to access your accounts online. Things like that can happen that have absolutely nothing to do with crazy apocalyptic style stuff. And the security you get from having that, I think, is a good thing, and it helps you prepare for a lot of potential downtimes, regardless of what that downtime might be. However, having said all that, as I researched this more and realized the even bigger scale of derivatives that I'd mentioned the first time around, and how leveraged these banks are in terms of how they have decided to take on debt or potential losses that are far in excess of what their total assets are, and how almost none of their assets are held in actual cash. Most of these banks do not have a cash reserve that's anywhere near where it needs to be in order to handle any kind of a crisis relating to currency. Now, with federal regulations and whatnot, the number can range anywhere from 3 to 10%, but only with certain kinds of debts they're required to go up to 10%. So an awful lot of banks have closer to 3%. We talked about how Deutsche Bank only maintains 3% cash reserve, and they are 96% leveraged up in derivatives. So I don't want to beat this up too much. When I come up with new information, I obviously want to try to share it with you, simply because I think that this is a real potential thing on the horizon. And it's not like we've lived with derivatives forever. The growth in derivatives is really a this century thing. It's a 2002 thing where it was relatively deregulated, and it just grew at crazy levels. And I'm just not sure what the deal is. Part of me thinks it's just a psychology thing where the banks are just convinced that no matter what bad things happen, they'll get bailed out. And at this money level, at this price point, I don't see how it's even possible for them to get bailed out, given the amount of debt we're talking about. So being personally prepared to manage some period of time where we might see crazy inflation or we might see some very bizarre economic things happening, I think is absolutely a smart thing to do. Okay, so I know I've sucked up most of the show today with that particular topic. One thing I wanted to do, though, was also sort of revisit something I've tried to share with you in the past that I didn't learn. In the past, I've always said when you're looking for investment properties, do not base your search on what you would want. Do not base your search on what you're looking for in a house. And it's the same psychology that I think affects. Don't assume everyone out there who's going to buy a house you might want to sell likes the things you like, right? You need to put on the hat of the largest percentage of buyers out there so that you can appeal to them. And my thing is, as I've mentioned, I've been looking for an investment property, and it's been one of those things where I've toyed with the idea that I might live in it for a while and then rent it, or I might rent it now and then live in it later. And I finally came to the conclusion, because a lot of the math wasn't working. In my particular case, I was looking for things with larger lot size, that type of stuff. And the math just wasn't working. I kept doing analysis, and it was one of those deals where I was either going to have to be much more leveraged into the property, put down a lot more money to make it positive cash flow, or be negative cash flow for a period of time. So I changed my parameters, and I got rid of the larger lot size requirement. And once I did that, suddenly I was able to find properties that would work. I've been looking at areas in other parts of the country, not just my local area, and I'm suddenly, now that I've reinstituted my investor mindset, so that I'm not just thinking in terms of what I would like. I'm finding that I'm able to acquire properties. I'm able to be in a range where I could potentially buy it, where the amount of money I have rolled into it is reasonable, and my rate of return on my investment is absolutely respectable. And positive cash flow, of course. So do that. Don't let yourself get kind of sucked into, I wouldn't want to live here. Well, that's fine. You don't need to live there. If this is an investment property for you, keep your head separated for that. Take it for what it is. Make it as good as what it can be given what it is. And of course, be aware of the neighborhood and the things you can't change that will negatively affect your ability to potentially rent it. But not everybody wants 5 acres. Right? So you don't need to make that a requirement. A lot of folks want a low maintenance yard. So particularly if they're renters, the renters aren't going to take care of your yard. You're going to have to take care of that yard anyway, most likely, if you want it taken care of well. So just something I wanted to throw out there. It was a shift I made in my searching strategy today. And suddenly I was finding all these properties that worked. And it was me realizing that I was letting my own personal preference stand in the way of making smart investment search decisions. So I just thought I'd share that with you. All right, folks, once again, thank you so much for making the show a part of your daily life. You've actually done some amazing things this month in terms of the number of new listeners. And I'm actually a little bit stunned. Because of the numbers I'm seeing, I'm actually going in and double checking them to make sure they're correct. But if things keep going the way they're going, this will be, without doubt, the biggest month for the show in terms of additional listeners, in terms of more folks getting in and hopefully getting good benefit from what we talk about. So, and that only happens because of you, and I truly appreciate it. All right, folks, thanks again for listening. I'll talk to y'all next time.